I'm a professor at Utah State University in the Department of Applied Economics, and I do a lot of extension programming, so I work out amongst the region, and I'm at Nevada Indian Summit to talk about tax issues for farmers and ranchers, and I work with a group nationally for that.
Great. So you've had a lot of experience here in the West, obviously, and you were here last year for the same conference.
I was.
But today you're going to talk about specifically taxes and some of the new tax laws.
So I thought last year we talked about some of the changes that had happened because of the new tax legislation. And so because it's tax season and people are having their tax returns filled out right now, I thought it might be nice to just kind of give people a little bit of a heads up on what changes have happened to those tax forms and how they might look. And if you're used to having somebody prepare those, it's kind of nice to know what the forms are and what they look like so that you can look at what they actually have put together for you and what they're filing on your behalf and kind of know where to look for certain types of things and what's there.
Okay. And I'll say we'll put in the show notes maybe links to those forms, and for the video,
we can do that. Yes.
We'll actually show some of those changes.
Okay.
So what are the high level points?
So everybody has filled out a 1040 before, a U.S. individual income tax return, and if you there was a 1040 EZ that was mainly for you got wages from somebody with a W-2 and you filed your 1040. And then there was a 1040A that allowed a few more complicating factors. And then pretty soon, though, if you weren't on a 1040 EZ, you got a 1040, the long form is what they called it. And it was a front and back page. So with the changes, they now have one half page front and back that's the 1040. And there is no 1040 EZ or 1040A now. There is just a 1040. But it's a half a page, a front and back, kind of like a postcard. And so if you are like you were before on a 1040 EZ with just W-2 wages, then you can really do that on the current 1040. But if you start to have any of those other more complicating factors and other types of things, then they now have what they call schedules, and they're numbered 1 through 6. So schedule 1, 2, 3, 4, 5, 6. And so you add the additional information that would have had more lines on your 1040 onto the schedule, and then that gets added up and then transferred back to this smaller 1040 form. And so you can see these new schedules attached. If you have like a farming business, you'll see those.
And is the reason for this to make it easier, or?
It was, yes, to make it easier, but they kind of nested it. So if you think of like those Russian dolls that you nest those dolls, so one inside of one, that's really kind of the way that you can end up with these tax forms. And tax forms are always kind of that way, but I think that there's another little step here. So on the 1040, that would be your big doll that has everything. And then inside of there, you have some information on the Schedule 1, and that's going to add together your information from a business, which was Schedule C before, we still have Schedule C, but and then Schedule F, your farm or ranch business, and then if you have cull cattle, sometimes that's on the form 4797, and all of those forms may not mean anything to you, but just your farming business income, other business income is added together on Schedule 1, and then the total of all of those other business incomes is then transferred over to your 1040 on one line, where before you had a whole section that listed out those various places. And so now it's just on the separate supporting schedule, and that one's on Schedule 1. Then if you have self-employment tax that you're paying and deducting part of that, that would be on Schedule 4. Basically, there's these 6 schedules, and now if you see that 1040 in the front of your tax return, then look to see if you have a Schedule 1 through 6 behind it, and that's more information that you might have seen on the 1040 before, but now you're going to have to look at both forms to get it.
Okay.
And then beyond there, it's more like it has always been, because you still have the same Schedule F for your farm and ranch income that you had before. You still have the same Schedule C that you had before for your business income. And so all of that is the same, but just kind of how it gets transferred to the 1040 now. It goes through this pass-through. I shouldn't use those words because that's pass-through has definite meaning in tax code. But it goes onto a Schedule 1 and gets summarized there, and then the total gets added to 1040 rather than summarized on 1040 itself.
Okay, great.
So not really that complicated, but just is something to be aware of as you're looking through what your tax preparer prepares and has you sign.
And this applies to everybody?
Yes.
Okay, great. What else can you say about the changes?
It's still kind of a work in progress a little bit. And so there was something on the IRS website I'm trying to see if I can find the actual language that basically said that they were still figuring things out and changes would be coming to certain forms and certain instructions to those forms. Changes are forthcoming for the following instructions, and that included, the 1040 and other types of things. So there still is some of these little things that I think are still getting themselves worked out. I've heard from, one thing that we're seeing is normally if you have a larger portion of your total income coming from your farm or ranch, and you don't file estimated tax payments, you have to file a farm return normally by the 1st of March. And this year they extended that they waived the penalty for not doing that to April 15th. So basically those returns could have until April 15th to get filed, because there still had some things up in the air about how should certain things have a certain treatment. And I don't think it affects everybody, but there is still some of these things that as they go through this process, I've heard issues with when you get into some of these really technical areas, some of the professional tax preparation software, has differences of opinion in how it's treating certain things. And so you're seeing some of those conversations going on nationally. They don't affect everybody, but they are there. And so it's good to kind of know that they're there and just, I guess, not get a lot of heartburn over them. But there are some changes, and I think we'll continue to see some changes.
When in doubt, consult an accountant?
I think you really do. When you get into anything very complex, it really is, you have to have a professional tax preparer. And so podcasts like this and some of the other educational programs we've had, I don't think it's to make you really prepare your own tax return. I always say it's to make you a better person to communicate with your professional tax preparer. They're doing this, you're signing it, it's a legal document. It's money. A lot of times it can be very significant money that, you're paying. And so it makes sense to have some information about what they're doing and have better conversations with them instead of just saying, here it is, where do I sign? Instead of having that blind faith, to really kind of have a little bit of an understanding. So when you get into the subtleties, you really need that professional tax preparer, and it gets complicated. But for the overall overreaching, it's not that complicated, and you can really kind of see in general what's going on. And I think it just helps you have better conversations. There's a new, if you had business income, they call it pass-through income. So income that was from a partnership, but you pay it as an individual. You pay income tax on your business, your farm business as an individual. That's why they call it pass-through income, because it passes from the business and you pay the tax as an individual rather than the business pays the tax. They call that qualified business income, QBI, and there's a 20% deduction on that, but it's complicated. And they have a short form with very little instructions, and then they have a longer form with not a lot of instructions. And so a lot of the complications really revolve around what happens, what qualifies for that qualified business income deduction, and what limits it. Because there's a few different things that limit it. It's limited to 20% of your qualified business income, but then you have to have a other certain amount of income. And so, there's different things that kind of, it has to be the lesser of this or that. That's where you have to have your professional tax preparer. But that is there, and so for certain people, I think that can be a significant deduction. For other people, I don't think you'll see it as much.
Great. Thank you so much.
Okay.